Hello and welcome back. My name is Jen Gitiche. I'm a finance and investment trainer. I'm also the founder of Japesh Financial Solutions. So if you're new here, stay with me because by the end of this conversation, I'm going to talk about investing in gold. You will understand why investors use gold, how gold actually behaves, how you can invest in gold, how much gold makes sense, and finally, the risks you must understand. This is not investment advice, this is purely financial education so you can make better decisions. So let's begin.
Hello, Jen.
Hi.
So why has gold remained valuable for so many years?
Yeah, gold has remained very valuable for so many years simply because people trust it, not because it earns interest, not because it grows like a business, but because gold is rare, it's durable, globally recognized, and easy to convert into value almost everywhere in the world, basically. So during uncertainties, like when there is inflation, when there is political instabilities, when currencies have a pressure, investors often turn to investing into gold. Here is the mindset, rather the mindset shift why people must understand before investing in gold. Gold is not about making money fast. No, 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 no. Gold is about protecting money slowly. Gold is not about growing. It's not a growth engine, basically. Growth is an insurance inside your portfolio.
Okay.
Yeah.
And does gold always go up, or what actually affects its price?
Wow. No, 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 no. Gold does not go up every year. And that's very important. Gold prices are actually influenced by one, global economic uncertainties, two, inflation expectations, yeah, three, interest rates, four, the strength of the US dollar, and finally, the central banks buying gold. When interest rates are high, gold becomes less attractive because it does not pay interest rates. Yeah. When fear arises or currencies weaken, gold often becomes more attractive. That's why gold prices can rise very sharply or fall suddenly or stay flat for long periods. So when someone says gold only goes up, that's not accurate. Currently, yeah, we have seen gold prices have sharply gone up, especially after what's happening with the US. Yeah. So simply, people are running to get, or rather to buy gold, but you need to ask yourself, does it match with my portfolio level? So that at least you don't do a hastened decision, yet thinking like you'll make a lot of money, but it needs to determine. People buy gold for protection and not to increase, or rather to have a lot of money.
Oh, okay.
Yeah.
And so practically, how can Kenyans, or basically anyone, invest in gold today?
The simplest way, I'll start with one. For most Kenyans or anyone, the most practical or regulated option is having a gold EFT. In Kenya, there is a bank that has a new gold EFT, and it's listed on the NSC. And how does it work here? You basically open your CDS account, you buy units like shares, just how we always train people to buy shares. And have you attended our master classes? I know you're a champion in that, yeah.
We are attending.
So when you buy, like the way you buy shares, and then you don't store physical gold, that EFT basically enables you to have like a portion of gold, but you don't have it physically, so that you avoid security and authenticity risks.
Oh, okay.
Kizungu, wacha tu. Yeah. And one very important detail when it comes to these EFT, yeah, the EFTs is priced in Kenya shillings. So your returns are affected by one, global gold prices, yeah, and two, the Kenya shilling USD exchange rates. What do I mean by this? Yeah, gold may be flat globally, but your investment rises as the Kenya shillings weakens. Or gold may rise globally, but gains reduce if the Kenya shillings strengthens. And it's normal and it must be understood.
Oh, all right. Very indicative. What should international platforms or gold? What about international platforms or gold mining stocks?
Yeah, that's another option too. Yeah, like I said, the first option on how to invest in gold, you can get it from like as an EFT. I know one of the banks that has introduced these gold EFT. The second one, you can do it as either global EFT, or you invest in these gold mining companies. So, and for global EFT, you can use international platforms. But here is the key distinctions. Gold mining stocks are not the same as gold. They depend on the one, management quality, production cost, operational efficiencies, business risks. Mining stocks can outperform gold, but they can also underperform when the gold prices are stable. These are, when I talk about these, these are better suited for advanced investor. When you're a beginner in terms of investing, don't rush and choose gold as your first investment in your portfolio.
So we leave it to the pros, huh?
Not to the pros, but at least you need to have at least stabilized your portfolio to get to a point that now you need gold as a protection mechanism.
Oh, okay.
Yeah.
And what about now the physical gold, the gold itself that we see?
Unatupeleka kabisa. You've decided to take us to Congo and get those bars, yeah?
Yeah, the bars.
So physical gold includes either bars, coins, jewelry. While it feels tangible, it comes with a lot of challenges, because buying physical gold is, you buy it at a very high premium. There is a risk that you'll get fake or impure gold. We have seen those cases around.
True.
The storage and security cost that you need to be putting that physical gold, and then the resale becomes sometimes very difficult. So for most people, physical gold is just emotional, not efficient. But if you want the physical gold, go for it.
Okay. And how much gold should someone realistically have in their portfolio?
As a smart investor, and that is where most investors go wrong, yeah? As a smart investor, gets around 5 to 10%. Gold should not dominate your portfolio. A simple guideline, like I said, 5 to 10% is what a smart investor will get to balance that portfolio. Slightly higher only if you're intentionally hedging currency or you're doing a systematic risk. Gold should support your portfolio, not replace growth assets. Growth, when I mean by growth assets, what do I mean? Things like gold should not be replacing your business, your equities, your properties. Instead, you should have a balanced portfolio, and balance matters more than volume. So like I said again, at least have 5 to 10%. Either you're doing hedging, you're doing protection, or you're doing diversification.
All right. And what risk should people be aware of before investing in gold?
There are so many risks, yeah. Let's talk about risk in this way. Gold can be very volatile. It does not generate income. Like bonds, shares, they do not generate income. And it can underperform for long periods. Right now we have seen like every year it will keep on like increasing in prices, but sometimes it can go for a longer period without increasing in value, and it is influenced by global factors which you do not have control over. Like what is happening right now, I won't mention because I don't want kidogo, you see me with those people coming to me. So gold should never be emergency fund, like you're putting aside. But as much as we talk about emergency funds are for protection, gold is for that person with that big portfolio. They need to just now have a balanced portfolio. And this is not, you don't go buying gold with maybe money for like your kid is going in 2 years in college or that school fees. No, 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 no. You don't put such money there. So gold works best with patience and clarity.
And what's a simple gold strategy for now beginners?
Wow. Here's a simple and realistic strategy for a beginner. One, decide why you want gold. Is it for protection? Is it for diversification? Or is it for currency hedge? Two, choose a simple structure. For most Kenyans, a gold EFT is good enough to start with. Yeah. Then three, allocate modestly. Start with around at least 5 to 7% of your overall portfolio. And four, buy gradually. What do I mean by this? Don't chase headlines. Like I said, right now it's the hype. Telling you everyone, and most clients are calling me, should I buy gold? Where can I buy gold? But buy it gradually without the hype. And finally, review it annually. Rebalance if gold grows for too long or too small. Gold should work quietly in the background. Yeah.
Okay.
To summarize all these, gold is protection, like I've said, and not hype. Gold is for balance and not for growth. Anyone can access gold safely through regulated structures like the EFTs, and over allocating gold is very risky, and because you'll be ignoring all the what we have talked about, because your portfolio basically needs to have 5 to 10% of it. If this video brought you clarity, please like, subscribe, and hit that notification button. And if you want a structured guidance on building a balanced investment portfolio, you'll find my training links below. Thank you for watching. I'll see you in the next lesson.